manager, I think a very large part of your time, more than 50%, will be just reading and meeting companies, other companies where you can invest money, because that's the primary job of a fund manager, to constantly be looking for good opportunities to invest. A lot of times these opportunities present themselves. A lot of time you have to go and seek them out. So reading up a lot about what's happening globally, which are the industries that are going through upheavals, talking to industry specialists, talking to research team, guiding the research team into the right direction. So our research team constantly goes and meets new companies, comes back, reports. Then we decide what is more that is needed to be done in the research. So I think a large part of time is and should be spent on this part, when you're constantly evaluating opportunities, and at the same time, the portfolio that you already have, you are always trying to improve it. Because the whole idea is that at the end of the day, the investors who have given you money should make a very attractive return on their investment. Then some part of it goes in talking to distributors, because as a fund manager, you're also responsible directly or indirectly to increase the assets under management, the AUM as we call it. So there are distributors who want to know more about the strategy, more about your portfolio. So I would say about 15% of the time goes in that, and another 10% of the time goes in talking to individual investors who, before giving you more money to manage, want to understand how their money would be invested and where it would be invested. So I would say that this is where, how my time goes. It's about 60-70% in research, and balance between, working on increasing our assets under management. Profession growth is when you start at the bottom level is 100% research. That's your job. So you typically would join at the level which is called research analyst, and you would be guided by a research associate or a research head, depending on the size of the organization. So they would give you, they would tell you that, look, I want to either research this sector, because this sector we believe can potentially create a lot of returns. It's a small sector. Let's take chemicals. Somebody says that, look, because of all the problems in China, a lot of global buyers are looking at buying chemicals from India. So if that was to happen, then which companies in India will benefit? So just go out and find that. So then you would spend all your time, going to the industry association, finding who are the companies in that space, calling up those companies, meeting them, trying to find industry experts that you can talk to. And then you will constantly recalibrate your research with your guide, with whoever is your, person you're reporting to, who would keep pushing you in the right direction. But the outcome is, by end of it, it may take many months, but at the end of it, you would be able to give your company a very good idea of where is there any real opportunity, and if there is a real opportunity, which are the potential candidates that can benefit. Now that is when your research head will take that and say, okay, if there is a positive opportunity, let's take it to the next level, and then you will get plugged into even more senior research mandate. So that is what you will do for probably 3 to 4 years, of your entry into any buy-side fund management company. Good research analysts make very good fund managers. I mean, that's the eternal truth. And if you go back again, I talked about Warren Buffett, one of the top 10 richest people in the world, never had a research analyst work under him, does all his research, does all his, by himself. So I think that is very important, that the quality, the skills that you develop during those formative years are very important. Now, 4 to 5 years into the organization, when you have risen, then you have a choice of, growing into a pure research role again as a research head, or you can take on a role which is sales and marketing. There are some people who enjoy that too. But let's assume that you become the research head. After 5 years of working as research analyst, research associate, you become research head, and then you will be covering as a research head a lot of sectors. Which, like an analyst, you would be limited to 1 or 2 sectors. As a research head, you will be covering 7, 8 sectors. Which could be banking, financial services, IT, chemicals, pharmaceuticals, hospitality, various different sectors. So the hope is by that time you have learned enough about these sectors, and you're guiding a team of research analysts under you to do further deeper research. 3 or 4 years of this role is when you can get into the fund management role. You can become, so if you're a very large fund management company, they have multiple portfolio managers. So each one of them is given an allocation. So let's say the fund management company is managing $1 billion. So it may have 10 portfolio managers who may all have $100 million to manage. So those portfolio managers would then be constantly talking to the research head, asking them, what ideas have you found? What is it that looks interesting? Or if they have ideas, they'll bounce it off the research team. And between them, they will come and create portfolios. And after that comes the fund management, which is the topmost rung, which you can aspire to get after 20 years of doing research and portfolio management. That is the highest level, where you are right at the top, and you are getting these filtered ideas from your research analyst to research head to portfolio manager. The portfolio manager comes and says, look, I found this great company. I'm very convinced. I want to invest in it. So then you say, okay, let's look at it again. Let's look at it together. You go meet that company. You would go spend time with the, if it's a manufacturing company, you would go and talk to the factory manager, see the factory, talk to their customers. And then you say, okay, looks good, so the portfolio manager, please go ahead and add it to your portfolio. So that is how, the hierarchy works. So it would take you about 20 years to rise to the fund manager role. So Nikhar, I wouldn't call it a myth. I think there is truth in it, and there is truth because there is definitely stress. But at the same time, different people react differently to that stress. And there are instances where people have burnt out, people have, kind of completely exited capital markets, investment management because of short-term underperformance or not being able to deal with the market volatility. So the problem is that even when you do your best research, even if you follow the best research process, the markets may go against you, and you may ultimately be proven right, but it may be too late, for you to be proven right. And then by then your investors say, look, man, the other stocks are going up, your stock is not going up, I'm not. So that is where the stress part comes in. The stress comes in when you believe you are right, but the market is telling you something else. And because of that friction, stress comes in. And I think, again, people who have the emotional forbearance to ignore that friction, they last for a very long time. 28 years of investing, I've seen enough cycles, 7, 8 times, where literally it was like nothing is left, let's exit, let's do something else, let's. But then you say, look, it's a matter of time, the market will come back. And again, going back to Warren Buffett has underperformed the market so many times. He's missed huge rallies like the whole dot-com bubble, 2008 banking financial crisis. He missed because, he just stayed true to what he wanted to invest in. So while the markets have gone up and down like this, his graph has been like this. So I think that's where the emotional stability comes in. The most important part here, Nikhar, for the audience here is to understand that just like most of the other things, as long as you focus on the process and not on the outcome, there is very little stress. I think the people who focus too much on the outcome, they are the ones who come under stress, because every day they are judging themselves by the outcome. So whereas with experience, you realize that outcome is not really in my control. I'm just a small investor. There are hundreds of thousands of global investors, and what they may decide to do on a day or a month or a week is completely out of my control. So all that I control is how well I manage my investment process. So once you realize that, look, these two things don't work together, they will never work together. It will always be chalk and cheese. So then the stress levels come down dramatically. And I think, I recently saw a video of Mahendra Singh Dhoni, probably one of the best captains we have had. And he said the same thing that, I remain cool through all this, excitement, because I'm focusing only on the process. I'm not focusing on the outcome. The outcome will take care of itself. So if you're only focused on the process, then the stress levels go down. But if you're not, then yes, it can be a very brutal industry.